In the process of valuation, particularly in a privatization, Richie, you have to balance two things, the seller and the buyer.
So for somebody, explain what dividends is. I know I've sort of said it, but I'd like you to say it. Because part of owning a company, some of the benefits that come with that is dividends.
Yes. So Richie, let me answer your question in this way. What is a share? A share is a piece of ownership of a company. Why buy a share? There are generally two benefits. One is I can buy the share at whatever price it is. And the reason I'm buying that share is because I can see there's good growth prospects in this company. And when the company does well, more people will want to buy that share. And it's likely because of increased demand that the share price will move from that price I bought it at to a higher price. And so one of the reasons I'm buying those shares is because I can make a gain from the price moving from where it is now to where it will go in the future. That's what we call capital gains.
Okay.
The second reason...
Let's say that again in layman. You buy a share for 5 shillings.
Yes.
Because you can see, hey, these guys will do this, they'll do this. Hey, in 2 years, this 5 shillings of this company will now be 7 shillings.
Yes.
Or let me even say 10 shillings.
Yeah.
And then I can sell it at 10 shillings.
Yes.
Okay. And that's capital gains.
That's what we call capital gains.
Yes.
However, as this company is doing well, they're making profits. And different companies have different dividend policies. And dividend is the profit they decide to share with shareholders or owners of the company. So when a company makes a profit, it will decide, I'll give 30% or 50% of my profit as dividend to my owners. So that's the second benefit you have, is to receive dividends. So companies pay dividends annually. So like there are some banks that pay dividends of 14%. 14% meaning...
14% of the profit?
No. As in, if I have 10, let's say I have 100,000 shillings worth of shares in that company, they'll pay me 14%
of that 100,000 shillings.
That's the dividend yield,
A good 14K.
So I'll get 14K for my 100,000.
And I still have my 100,000. Let's be clear.
Yeah.
You still own your share.
And hopefully your 100,000 is now 103.
Yes.
Yeah? So those are the two benefits.
So what I'm hearing you say, this Kenyan the government of Kenya, was like, from your profits, I want 80%. Yeah. So, for example, what was the profit last year? Or give me the profit that
So the profit before tax last year was about 12 billion.
80% of that 12 billion?
No, not 80. So then there's tax. Right?
Okay.
So let's call it 9B. Let's call it 9B. So 80% of that 9B then goes to the government. As
dividends.
Yes. So if they want to do anything, like capital expenditure for, expenses for building another pipeline, expanding the pipeline or whatever it is, they have to then now go back to the government and ask for money if they don't have enough internally generated funds.
Okay.
So they have to go back to Treasury to ask for money.
Rina, we are still talking about the process, and all of these rabbit holes are necessary because we're learning through them.
Okay.
So you're telling me, what do companies generally do with profit? They plow it back into the business for growth.
Or they share with their owners.
Oh, yes, actually. Or
so most companies have a dividend policy. Most listed companies have a dividend policy where they say 35% of what we generate as profits goes back to shareholders. There are some who even say, we are not giving you, the shareholder, any dividends because we have so many ideas and so many things that we want to do with our business that we will give you dividend in capital gains. I remember Centum did this many years ago. And they said, for this number of years, we're not giving you a dividend. Why? The share price is going to move in a nice way. So just chill, be easy, relax. And so they reinvested the money back into the business, expansion and so on, and with the idea that then with the growth in the business, increased profitability, the share price should then go up. So different companies have different dividend policies. I
love what you're saying, because what you're also saying, which people need to be aware of, dividends is not guaranteed. It is not compulsory by the business.
No, it's a process that goes through board and shareholder approval.
AGMs.
AGMs.
Annual general meetings.
Yes. So for example, at the AGM, it will be discussed. Company ABCD is proposing, or the board of company ABCD, because it starts with a board approval and a resolution that is made, that then goes to the annual general meeting. And the annual general meeting is a meeting of all shareholders who own this business, who then vote on the different things that are brought to the table. And one of those things is dividends. So we propose to issue a dividend of X. So shareholders are like, oh my gosh, that's so little, or no, we should not pay dividend, or whatever it is. No, oh, well, shareholders never say no. But they then vote to approve that dividend, and then the dividend is paid.
So you, as an owner in the company, even with one share, become a person in the AGM. Okay, we're still at process. By the way, I've understood business valuation, I've understood asset valuation, I've understood what it is that you were doing. What happens now when you value the business, and how much then did you value our wonderful Kenya Pipeline PLC at?
Yeah. So the number of shares that the government is issuing is 18, well, not the authorized is 18 billion shares, a little over 18 billion shares.
Did they have this before the IPO came into effect?
No, they had, okay, now I'm trying to do the math in my head. We've basically done a split of the shares for 1 to 1,000.
Okay.
I think it was 18 million or 18 million shares or 1.8 million shares. So,
Okay.
Yeah, so now we've now increased the number of shares and reduced the par value from 20 shillings to 0.02 shillings per share. Why? To make the share price cheap.
Okay.
And available. So the split and the number of shares is not a function of value. It's a function of trying to make sure that the share price is we're
accessible.
Trying to do, yeah, that anybody can buy the shares.
Okay.
Now the 9 shillings with the total number of shares gives an implied value of 163 billion shillings.
Hold on, Rina. I'm alert right now, like crazy, but then I want to take you slowly. So, first things first, after the valuation, there was this amount of shares that KPC, the government had, the 100%.
Yes.
The 100%. So, this 100% may have been at a higher price. So you times the 1,000 to make it cheaper and accessible.
Yes.
Am I right when I say that?
Yes, you're right.
So then, where then does the 9 shillings come up? Because I've heard you say 9.
So 9 shillings is the price once we find the value of this business. So what did we do? We came up with a valuation methodology that using EV, which is enterprise value, divided by EBITDA, which is a multiple. So we used a comparable. We looked at, so it's called a relative valuation. We looked at different pipeline companies. So one of the difficulties that we've had is that we don't have similar businesses in the country or in the region or even in Africa. We don't
South Africa doesn't have?
No, there's no similar
What
business.
makes us different?
The fact that it's a monopoly, that it's a pipeline that goes where it's going. And so we don't have that. We don't have a pipeline that replicates or is similar, that is comparable, that is listed.
Okay.
That is listed. Because you have to determine the price that you're comparing it with. Okay, so we couldn't find a pipeline in Africa that is listed. We don't have one. None. This is going to be the first listed pipeline in Africa. The one that is in a developing country that was closest was India. And
that is
India
listed.
has several. Yeah, India has several pipelines.
Okay.
Not just one. So we were looking at, enterprise value, because that's the value of the whole business. And EBITDA. Now, why EBITDA?
EBITDA.
It's earnings
before
interest, tax, depreciation, and amortization. We needed to find so we are comparing companies. So you can have 2 identical companies that have different depreciation policies. And then when you have a company that is asset heavy and another one that is not as asset heavy, even in the same industry, how do you compare them? Because the one that is asset heavy will have depreciation charges that have 0 impact on cash flow. Because there's no cash I'm paying out. Yes, there's depreciation that goes in the expense and then I get a lower profit. But there's actually no cash going out Am I making sense?
You're making sense, but
and
I
so
just want
you
to take
add back so you have earnings before interest and tax.
I know
That's
this
profit
may
before
sound
tax.
layman, but depreciation, in case somebody's wondering what that means, it's the decrease of an asset.
Yeah, so exactly. It's you have to.
If your car was worth 100,000, next year that car will not be worth 100,000.
Yeah.
It's gone down if you don't do anything to it.
Yes. And in accounting policies, you have to expense that.
Okay, you have to have it
Reduction.
inside. Okay.
Yeah, you have to expense that. But now, have you lost cash in your bank account for the value of the car going down?
No.
You still have the asset, you're still driving it around. So because there's no cash.
I get it. I understand what you're saying.
Yeah, so I want to compare companies. So the best thing is to add back tax, add back depreciation, add back the impact of financing. Because if you have debt and I don't have debt, how do we compare the two? So the interest charge will be high for me, but that's because I'm highly leveraged, so I have a lot of debt. Whereas for you don't have a lot of debt, but how do we compare the two companies? So you add back depreciation, you add back amortization, and you add back interest.
What is amortization?
So it's the same as depreciation, but for intangible assets. So goodwill, for example.
Okay.
Yeah? So the EV EBITDA multiple for listed companies. So we looked at India. We also looked at the US. When we did the average, even the median, it's like 9 or so, 9 times. Okay? So we ended up with an 8.1 times valuation, which were like, it's comparable to other companies. And when we looked at those other companies' profit margins, right? KPC's profit margins were higher. The margins were higher. They were very low leverage. These other ones have a high debt, and so on and so forth. Some of them, even the PE ratio was higher. So we're like, okay, price to earnings ratio, which is what people are using to say that perhaps it's overvalued. But I don't even want to go into that. I think the point is that price to earnings ratio is what people use as a back of the envelope calculation to see where are most companies in a certain sector or in a certain stock exchange trading at. Yeah? And therefore, is this price too high relative to these companies or low relative to these companies?
Okay.
So we like EV/EBITDA because it's a function of the enterprise value of the company, the business, and also EBITDA, which is then comparable with others after removing things that are non-cash. So anyway, that's what we chose to do. Now, in the process of valuation, particularly in a privatization, Richie, you have to balance two things: the seller and the buyer. The seller, this is a public asset. We own it. If we were selling this to Georgia, all right? If we were selling this asset to Georgia, would we sell it at the cheapest price possible? Answer me.
No, of course not.
Why not? So you want to be nice to them?
What do you mean? Like if you come and buy my thing, I give you the cheapest. I'm giving.
Yeah, lowest value, please. I want to be nice to Georgia. Would I do that? No. Of course not, right? Now, who are we selling to? What did I say are the objectives of this thing? We want Kenyans to participate. So do you know, we sat with GM infrastructure, GM strategy at KPC. The GM strategy told us that they had offers in writing for KPC at much higher, even 200 billion. But they chose not to go that direction, but to allow Kenyans to participate. Now, we can't give, that's very high, okay? But it's because it's a very strategic asset, as I said earlier.
I get it.
Right? So you have to also look at the fact that it's a monopoly. There's no other country in this region that has a pipeline of this nature. So there has to be some kind of a little premium you put on that, okay? And so on and so forth. So that's why somebody would be willing to pay almost 200 billion shillings for this. Anyway, back to our discussion. You also have to balance the buyer. What does the buyer want? To buy the best price possible.
I want that capital gains. I want that dividends.
Right?
Yep.
So,
and I want it immediately. Unfortunately, that's a Kenyan mentality, but
yeah.
I want it, not even Kenya, it's an investor mentality.
Yeah.
we want it as soon as possible.
Exactly. So we need to balance both the seller and the buyer. Give the seller a good price, but also give the buyer a good price. And we had to find a way of balancing the two interests.
Yeah.
And so because also, as we did our market sounding, it was clear that there's a huge interest in Kenya Pipeline. We also did market, because that's another thing you have to do. Like I said, selling a car, you can't just sell a car based on the valuation of your mechanic or the insurance company. You also want to know what is the market seeing.
Core ground. We call it core ground.
So when we did V2 core ground, we're like, okay, these guys are not far off from where we are. Actually, we're speaking the same language, so we're not far off in terms of pricing. And so then we developed the price based on all those factors. And I said valuation and pricing are slightly different, because there's more. It's an art and a science, pricing, both of them actually. So anyway, so we came up with a price of 9 shillings, which we feel is affordable, and it is not grossly overvalued. It is not. It is a fair price for Kenyans to pay for Kenya Pipeline, especially given all the things that I said, the contingent liabilities that I mentioned that caused us to reduce the earnings, especially because of, those are one-offs. Do you understand what I'm saying? We're not going to have a 2.83 billion charge on the profit and loss every year. We're not. Those are one-offs. We're going to have a company that is not held back by red tape and government bureaucracy, that's going to be able to implement strategy that it has been planning and putting together for so long. A team that is going to be professionally run in a governance structure that is working for the shareholder. I mean, I can't wait. So my point is this. It is not overvalued, okay? It is a fair value for the company. And I think that's what I'll say for now.
Again, I want to make this clear. This video is for the basis of education.
Yeah. No, I'm not. Yeah.
No. I need to say this. On the basis of what you have said, somebody may feel like it's overvalued, but at least now they have the information as to why they feel like it's overvalued. Yeah. The genuine information. Somebody may hear this and be like, oh, okay, I didn't know about that contingency that had been removed. I didn't know about that fiber optic cable that can bring about growth even in profitability. Yeah. I didn't know about, again, I think that I read in the IM, and you can go and download, the change in governance.
Yes, that's a big one.
Yes.
So one of the things that we've done that is unprecedented is instituted within the memorandum and articles of this company that there are 2 board seats for 2 certain types of people. One of the board seats is for the Fund Managers Association, FMA, and the Fund Managers Association is comprised of, the members are basically asset managers, fund managers, okay? So people like, I'll just give you a few names. ICA, Britam, Sanlam, Old Mutual, do those names sound familiar? Yep. Those are fund managers. Nabo Capital, those are fund managers. So they have an association and they will vote who they want to represent their interests as investors on the board of KPC.
Oh, wonderful.
Now, what does that do? Okay.
And these guys are probably going to be investors.
These are professional investors, not just investors.
No, what I mean, they are probably going to buy in.
Yes, they will. Yes. They will invest. I mean, they will invest. And so those who have invested will have an opportunity to sit on the board and formulate strategy and hold the company management to account. And make them accountable and check on things and be part of the audit and risk committee and things like that. The second board seat is for a very strategic partner, and that is the oil marketing companies. So oil marketing companies, through their association, will decide who will sit on their board to represent their interests. Now, these are a major customer of Kenya Pipeline. Of course, not the only customer, but a major customer of Kenya Pipeline, because they are in the downstream. They're the marketers who sell to us.
Do you have examples?
Petroleum. Yes. Shell, Rubis, Total. Exactly. You know the names. Yeah.
So that's amazing. These are the ones who the transportation is for them, comes to them. The product that is being transported comes to them. Again, I want to walk then through this process, because this video, at the end of the day, it is about the process of getting this product, or this company, sorry, not even product, to IPO. So you then do the valuation, and then now you come up with the share price. Now, in this pricing, do you decide, what if a guy has 200 billion, as you said, and wants to buy it all? You know, I'm serious. What if this thing is also going to Uganda? If I was in Uganda, I'd probably want a lot more. It's also going to Southern Sudan. Are there contingencies that have been, I mean, what's the structure like so that Richie can enter? You didn't put me in high net worth. So
we don't have a high net worth category.
I'm just joking. I'm just going to say, so how does it work?
Okay. So what we've done is we have an allocation policy that creates pools for the different investor categories. So we have a pool for Kenyan retail investors, individual investors. We have a pool for Kenyan institutional investors.
Okay.
We have a pool for employees of Kenya Pipeline.
Wow.
Yes. We have a pool for oil marketing companies. We have a pool for East African community members, and we have a pool for foreign investors. So anybody who doesn't come from the East African community is considered foreign.
Wow. Okay. What is the pool for majority of the people watching this? Would probably, first of all, go and download the IM because it'll probably be there. But can you explain the pools if you know them offhand?
Yeah. So we have, for the Kenyan retail investors, we have 20% allocation, meaning that they have a little over 20 billion available to be purchased.
How the government is selling what percentage of this, of their 100%?
65.
65. So they won't be the majority. I mean, they probably will be, but 65%, that leaves them with 35.
Yes.
Okay.
Then after Kenyan retail investors, 20%, we have Kenyan institutional investors, 20%. Kenya Pipeline employees, 5%.
Wow.
Oil marketing companies, 15%. East African community members, 20%. Foreign investors, 20%. However, in the event that all the pools are oversubscribed, in the event that we have a pool, the retail pool is oversubscribed, meaning we have more people, more applications than the 20%, the retail investors, Kenyans, will get priority over foreigners.
Oh, so their 20% will reduce.
Yes.
And our 20% will increase.
Yes.
If we, as the retail investors, individuals, are oversubscribed.
Yeah.
Now, what happens if, how many shares can I buy as Richie?
Well, as many as you want. As many as you want, but if it's in a situation of an oversubscription, you will be returned, you will get a refund.
I will get a refund?
Yeah.
And what's the minimum I can buy?
100 shares.
So 100 times 9, that's 900 shillings.
Yes.
So anybody with 900 shillings can get into this?
Yes.
Second question, we'll come back to, in the last video will probably be on the question on then how do I do it?
Okay.
If I want to.
Sure.
Again, educational purposes. It's so important that I keep stressing this out.
Please do.
Class in session. This is an opportunity that is so unique that we are currently going through an IPO, and somebody that I have access to is able to come and share this. So I want to know the institutional investors and the guys like Total, what do you call them again? And Shell.
Oil marketing companies.
The oil marketing companies. It's 9 bob. Are they asking?
It's 9 bob for everyone.
It's 9 bob for everybody. Are they asking for more?
They would like more.
Okay. That's a demand and supply thing. So, my head is doing calculation. It's demand and supply. And I'm just saying, to somebody who your 9 bob is overpriced, there's somebody else who actually understands this and wants more. I'm just saying there's two different people, and I do understand both aspects. When is the deadline? Actually, right now, is it open for anybody?
It's open. We opened on the 19th of January, and it will be open until the 19th of February.
Okay.
So 19th of February we close. Okay. Once
Yeah.
we've closed, you can't buy at 9 shillings. You have to wait for it to be listed, which will be around about the 5th of March or close around there.
Oh, that's not bad.
Now, once it's listed on the stock exchange, on the listing date, we'll have a bell ringing ceremony. We are hoping the president will be able to attend, and it'll be nice pomp and color to announce now the listing of the shares on the stock exchange. From that very day, you can sell or buy. So if you didn't buy during the IPO, you can buy then.
Yeah.
Or if you want to buy more, you can buy then in case there was an oversubscription.
Okay.
Mm-hmm. Or you can sell your shares.
Or you can sell. Okay. Let me come back. This video was about the process. So once you then figured out and came to the element of
the
price, where does this continue to?
In terms of?
In terms of where you are at right now. Because, so what happens once you decide the price?
So once you decide the price, you finish all the application process to the Capital Markets Authority.
So CMA is involved in this?
Oh, completely. Completely. They have to approve the IPO. Without their approval, we can't move because they're the regulator of the capital markets, and we're coming to the capital markets to raise money. So you put in an application, and there's all this documentation that you need, all these different no objections that you require. There's a whole list of things that is required as per the listing regulations, the public offer and listing disclosure requirements of the Capital Markets Authority. So based on those regulations, then we submit an application to the Capital Markets Authority. The Capital Markets Authority then reviews that application, comes back and asks us questions about things that are not clear, asks us to get this or the other, so there's a back and forth. And then once they're satisfied, they go to the management committee of the Capital Markets Authority. Then that goes to that's a technical committee. It then goes to the board of CMA.
Wow.
The board has to look at the IM, they have to look at all the different applications. If there's any red flags, they raise them, and then they approve. So that's a whole other process. So the CMA approved this offer on the 19th of January.
19th of January, 2026. Okay. Then now this information is made to the public, and the public can then buy if they want or decide to wait until it's listed. It's now up for all. For those who are interested in getting, I want us to come to that final video. And the video is like, okay, I want to buy. Okay. You've told me I have 900 shillings is what the minimum requirement. Do I just M-Pesa it to the air? What happens? How does it? What's this electronic thing that you created that we want to learn about? So when we come back, final video is the process of acquiring or getting into the IPO. We'll be back in a few. Again, share this video with as many people as you can. The video is for educational purposes. Get into the comments. You're allowed to give your different views on what Rina has shared. And we will be back with the final video after this.